Great pleasure to welcome to What's Next. We've got a trio of executives from Absa. We're going to talk about a fantastic report. It's the Africa Digital Assets Report 2025. How are you all doing this morning?
Great, thanks,
We
Aki.
well,
Thanks
you,
for having
Aki.
us.
Great to hear. No, thank you for being here. I'm really looking forward to unpacking this report. Rob, can you please tell us a little bit more about why Absa has really commissioned this report? What is behind the reasoning?
Sure. Yeah, and good to be here. So we obviously, as a team, we spend a lot of time poring over research and global research that gets done around digital assets and the market and what's happening in the market. And what we really have seen over the last couple of years is a lot of that research is focused on the global north and the developed markets. And where it does touch on emerging markets, it's largely focused on maybe the Latin American market or the Asian market. And when it comes into Africa, there might be one or two kind of markets that they look at and analyze. So what we really wanted to do was do a bit more of a deeper dive on our markets in Africa, look at some of the, obviously 5 markets that Absa operates in. We focused on 5 of our bigger markets and really understand what people are saying, both businesses and consumers, in terms of what their thinking is in terms of digital assets. Are they using them today? Do they understand the digital assets and the pros and the cons of digital assets? And really understand what the future looks like for them. Are they going to use them more, less, and what would encourage them into the market? So really, it's about finding out what the African consumers and African businesses are thinking, so that we can unpack that and feed that into the work we're doing.
And a very valuable information, getting that information. And Zanele, as a senior researcher, could you unpack for us about what went into this research and the report behind the scenes? And how did you gather that information? I imagine that there must have been a few challenges as well. So how did you go about this?
No, there were indeed challenges, Aki. But with compiling the report, it was such a fascinating and multifaceted endeavor in that we required, and we're very deliberate about it, having a true two-pronged approach to capture the spectrum of all the perspectives. So we conducted in-depth one-on-one interviews with businesses, so business owners as well as C-suite executives, making sure that we are representing a deliberate cross-section of the economy, from small to medium enterprises, as well as your large established corporations. We also had a comprehensive survey, which we sent out to retail clients. And now these included your private banking, as well as your wealth management clients, to make sure that we have a clear view of both institutional as well as individual sentiment. And with any research, there are always challenges, especially when you're looking at such high value or such or B2B research, really. And as you might expect, the challenge came from the human element rather than analytical. And the primary hurdle was the engagement itself. So we constantly encountered significant challenges when it came to confidence. So we'd reach out to the execs, and there was a confidence barrier where potential participants, even the seasoned executives, shared that they were a bit hesitant to engage because they felt that they did not quite lack the expertise to comment authoritatively on digital assets. So it wasn't really a matter of lack of interest, but rather that the perception, or rather the topic was a bit too niche, or it might require one with a technical background. So with high-level research, we do always anticipate such challenges. We make sure that we go out in time. We give ourselves sufficient time to make sure that we are able to engage with the right people. So getting that time right was also a bit of a challenge because we are looking to speak to top executives, and getting their time is not always as easy as one would think.
Well, listen, well done. I mean, for getting it, and I think that with the next survey, it's going to be a lot easier. There's going to be a lot more. People are going to feel a lot more comfortable.
We hope so, right? We always hope so.
And I'm glad you started it because it's such important information for Absa to learn about what's happening out there. Now, Rob, one of the key themes, and I found this fascinating, is that the report is that there's a trust deficit towards fintechs and crypto exchanges, and participants instead are trusting traditional banks more. And I guess if you look at the landscape, perhaps right now it might feel that way, but I do get a sense that this is changing, but it might be slow. Why do you believe this is the case? Because I know you've spent a lot of time analyzing this, and the last time we had a very similar event at Absa where we unpacked a lot of this kind of stuff. So why do you believe that this is the case?
Yeah, Aki, I think I'd probably frame it perhaps less of a trust deficit with exchanges and fintechs, more the trust in the traditional banks was higher. So the kind of questioning around this was, who do you trust most to offer you digital assets, and who would you like to offer you services? And in 4 of the 5 markets, more than 50% said they trust their banks. Kenya was the outlier. The Kenyans, I think, very mobile money first, M-Pesa adoption in Kenya. So they were very happy with the fintechs and the exchanges. I think that the primary reason for it is obviously banks, not just Absa, but the banking sector has been around for generations. People have been trusting their bank to look after their money, their investments, their borrowing for houses and cars for generations. And we've built that trust over a long time. Perhaps the kind of, obviously the technology and what we're talking about here, digital assets, are newer, but there's that embedded trust. For us as a bank, this was actually one of the greatest findings that we got, of course, because what it tells us is there's a great opportunity for us. But importantly, when the research was done, this wasn't positioned as Absa is doing research. This was positioned as market research. So the respondents didn't know that this was for a bank per se. And so that independence was really important for us as we did this. We didn't want it to be a bank is asking me about banking products and services. We wanted it to be market led. And that's why Thembi and the team at Krutham, I think, were so important to partner with us to do the research. They've got lots of experience at getting access to these execs, and we would struggle much more. But B, we wanted it to be independent. So I think fundamentally it's about trust in the banking sector.
Brilliant. Now, Juanetta, it's become very clear that reading this particular report, that while there's cautious optimism about digital assets, there are also some concerns. But Absa really can solve a lot of these concerns that people have. Can you expand on that for us, please?
Great. So I think from an Absa perspective, I mean, we've been actively working to address better education on digital assets. I think the bank's current strategy includes driving educational initiatives and building digital asset solutions to address some of these critical client and customer needs that we've actually unpacked in the report. I think another important element is around obviously equipping our clients and colleagues with insights and engaging them through multiple channels, such as this podcast, for example, because I think the more we continue to drive that educational element and build confidence with the partners in this journey, the better we can actually achieve our goals. I think lastly, the CIB leadership, the Absa CIB leadership actually recognizes that building that trust that we've harped on before and understanding is very essential for broader adoption. And it's taking a solid step to fulfill the role of being an educator and a trusted gateway in the digital assets ecosystem. And I think that's one critical role. I mean, some of those critical roles that we can play as a financial services business. Yes.
Very interesting. Zanele, I want to come back to you. When you were researching all of this, what were the most notable insights, in your opinion, from a South African perspective, and when we compare ourselves to our neighbors, for example, and where we are different? I'm quite interested to know what you picked up.
Aki, the South African digital assets landscape reveals a market that is both continental leader and a unique microcosm of advanced financial maturity, grappling with profound structural challenges. And the most notable insights show that our population is also financially savvy, but also very, very cautious. And where we saw that we're very similar to our African neighbors was when it came to the strong belief for financial inclusion. Like the rest of the continent, South African respondents showed that there is a very much powerful conviction when it comes to transformative potential of digital assets. And where we saw another similarity was when it came to the practical utility of over speculation. Across the market, we saw that the value proposition of digital assets is often rooted in solving immediate real-life problems. And in South Africa, it was very evident where we saw in the research that where we asked respondents, do you believe that digital assets can increase efficiency in cross-border payments? And we saw about half of respondents agreeing with that sentiment. And this aligns with the continental need for cheaper and faster immediate remittances, as well as international trade finance. So, and this is where crypto really stood out, as it was positioned as a tool that can really be used for practicality rather than a speculative asset. Another similarity we noted was when it came to security hurdles as well as usability, where there were some concerns about where respondents shared that they felt a bit uncertain about using digital, or rather the ease of use in using digital assets. And this could go back to the lack of education, which we highlighted earlier. And there's, of course, that issue about scams, where a lot of respondents across the markets highlighted that they were concerned about scams. And where we saw that South Africa was different from the rest of the markets was when it came to regulatory uncertainty being the dominant barrier. Of course, we asked all the markets what they think about the regulations in their countries, as well as whether it's clear and they understand what can and can't be done. But we had a very high number of South African respondents share that their unwillingness to engage, or rather they feeling that the regulatory uncertainty is very they're not so confident with engaging due to the regulations, is because the clearer guidelines, they're just not there, and they feel that more needs to be done when it comes to consumer protection. And this reflects a population that is very much accustomed to a structured financial regulatory environment, which sets us apart from our neighbors, where sometimes regulation is not as established as we've seen in the South African context. We also saw another notable difference coming from the demand for integration rather than replacement, where South African respondents emphasized the need for seamless integration with traditional finance. And I think this is where the trust element also came in that more were more willing or leaning more towards traditional banks when it came to trust, because this is what they're used to. And this also indicated a desire for the augmentation of existing sophisticated banking systems, and not necessarily to overthrow it. And this is a key difference born from South Africa's advanced financial infrastructure. So as much as South Africa, very much like its neighbors, share a hope for digital assets to drive financial inclusion, particularly when it comes to solving practical day-to-day problems, it also stood apart when it came to its sophistication and the regulatory consciousness approach, where respondents expect clarity, they expect to be educated, and because we are used to a well-established financial framework.
So fascinating. Rob, one of the interesting things and the findings was that in South Africa, cryptocurrency is wrongfully being seen primarily as an asset class. And we now know that it's evolving into something different, to becoming a digital cash of the new world, if we can put it in that way. I know that you've got your own thoughts on this. Is this something that Absa agrees with, and why?
Yeah, I mean, it's interesting, isn't it? I wish we could have done this survey 3 years ago, because I imagine we would have seen quite a different set of results 3 years ago or 4 years ago from today, because clearly, 8 million or so South Africans who have cryptocurrency or trade cryptocurrencies probably did that for the alternative asset and the speculative growth of that asset. And I suspect that's how most people got interested, because they thought that they could get a return on that, and that's a better return than perhaps some traditional investment opportunities. And hopefully most of the 8 million did okay, other than the last month or so, where it's been a bit difficult in the crypto market. I think the shift has definitely come in terms of more adoption of stable coins, and you see a lot more of the trading volume. If you talk to the exchanges, I think they're seeing high volumes of US dollar stable coins especially, and that indicates, I think, a utility that's being seen for cross-border payments, for domestic payments, and like you say, almost a cash alternative. Do we, I mean, from an Absa point of view, yes, we see that continuing. I think that's likely to grow. And I think Thembi made the point earlier in terms of some of the findings were around, and in the interviews that Thembi and her team did, a lot of businesses wanting to make sure there was regulatory certainty because they don't want to do anything that's against regulation. And we're seeing a lot of that through the research, through our engagements with clients. Businesses are more increasingly wanting to use things like stablecoins and tokenized deposits to move money globally and regionally, and they're looking for that clarity really from the regulatory standards to say what they can and can't do and how they must do it. So we definitely see stablecoins and tokenized deposits moving more like digital cash, as you say.
Okay, interesting. Juanita, I want to ask you the one thing I saw on the results that have come out is that 32% of South African respondents said that better education would encourage them to use more digital assets more frequently. And they also believe that financial institutions share part of the responsibility for this education. Is this something that Absa is doing? I know you are doing it, but is it something that you're going to be focusing more on in the future?
So I think 100% in terms of education, we cannot overemphasize that. As an organization, I think this is where we've got the opportunity to leverage, considering the number of customers and clients we come across on a daily basis. This is a big opportunity for the organization to actually jump onto that and actually walk the journey with clients and customers to empower them to make the right decisions for themselves across the whole value stream, where we talk about financial inclusion, even with their digital assets being used as tools for innovation and those cross-border transactions. So people need to understand how digital assets can actually empower them in their financial journey. So 100% education is a key priority for us as Absa to drive going forward.
And it's great on Absa for doing this, because there is such a demand. People want to learn. They want to know more about what we're talking about. And I'm glad that you're starting this educational program, because this is certainly something that's developing it into the future. Zanele, when you look at this research, and it's such fascinating insights, I'm enjoying this conversation. Is there anything else that you came across that really stands out from other African countries that you think that us here in South Africans that we can learn from and perhaps embrace and do things differently and learn from what they're doing?
There certainly was. I think when the insights came out, we were fascinated ourselves, particularly when we looked at Kenya. So Kenya was the outlier in the study, and this revealed a crucial mindset shift that South Africans can certainly learn from. And the key insight is a cultural embrace of digital assets as a pragmatic tool for transactional efficiency as well as financial agency, rather than primarily speculative investment, like we spoke about earlier. And as Rob mentioned earlier, when he spoke about M-Pesa, what we found in the study was the profound success of M-Pesa, particularly in Kenya. It created a foundational comfort with digital value and mobile-first finance, which predates cryptocurrency, as you may know. And this has fostered an environment where the population is already conditioned to see technology as a solution to daily challenges like remittances, and small businesses promoting small business payments and managing financial volatility. And the lesson that South Africa can learn is to focus on building and promoting use cases that solve specific high-friction problems in the local economy. So while South Africans are focused on the investment potential and regulatory risks that we spoke about, the Kenyan example shows that mass adoption is driven by demonstrable utility that empowers individuals and SMEs in their everyday transactions. And this is why we have this drive, this educational drive from Absa to ease the use and the understanding of how these assets work. So South Africa can learn from Kenya by shifting the narrative. It's more about complementing the sophisticated investment perspective with a relentless focus on building seamless, secure, and simple applications that can make digital assets useful for paying as well as transacting in the real economy. So that is the one aspect that we picked up. And like I said, when the results came out, we were fascinated by how out of majority of the market is speaking the same tune, and yet here's Kenya way ahead. Yes, we are continental leaders when it comes to our landscape, our digital assets landscape, but when we're talking about crypto in particular and the adoption of cryptocurrencies, Kenya was much ahead, and how they've adopted it, I think it stems from how they adopted M-Pesa as well.
Yes. Yeah, there's certainly, when you look at the success of M-Pesa, it seems like Kenya in certain segments of, the digital world, especially when it comes to financial and currencies, etc., they're almost like a step ahead of us, and it's great because it's a lesson, because I'm sure that M-Pesa has helped pave a lot of that way to where we are today. So it's a great insight that you gathered from Kenya, and well done, Kenya. Rob, lastly, how is Absa looking at actioning these insights from this report in a meaningful way? And also, where does one find this report? Is it something that one can download and analyze?
Yeah. So maybe a couple of different areas in terms of how we're using these insights. The first is maybe in the non-financial sector. So there's some good data. Obviously, just intrinsically, you get inputs from the clients who are understanding blockchain technology, understanding the opportunities. There was some data in here around, do they see efficiencies using blockchain technology, and do they think that could help their businesses? I was talking to a business yesterday who's using blockchain technology to record rent being paid from renters to the developers of the property. So there's a mutable record of what rent has been paid and who owes who. Great solutions. And for me, I mean, we spoke about this previously as well, Aki. The blockchain technology for Africa just continues to show opportunity in many ways. Bringing it back to kind of financial products and services, obviously that's where we are equally interested. I guess the first thing the research did was reinforce some of what we already thought, but that's hugely valuable, and it kind of tells us that clients have been thinking about this, and obviously they've been talking to us anyway. So it reinforced some of what we thought, and that's valuable. It also reinforced the opportunity that we have. I mean, I think the theme that comes through in this report extensively is there's a need for trust, there's a need for some clearer regulation, and of course that's work in progress in all of our markets. But that means we have a great opportunity. You'll have seen, I think, Aki, the announcement that we put out with our partnership with Ripple recently, that we're launching digital asset custody in the South African market. That's the first step for us, and we think that'll happen in there. We'll bring that to market in the new year. That's the first step for us to be able to support our clients by providing that kind of trusted custody capability. And then building on that, we're working on some other products and services too. So I guess for us, reinforced a lot of what we're working on. That's great, but also probably gave us an impetus to move a bit faster where we can, and continue working with the regulators to see how we can support them in creating that clarity that businesses and consumers are looking for. The report is downloadable from Absa's Corporate Investment Banking website. So you can go to our Corporate Investment Banking website, and the report is downloadable from there. Or search for probably Jay or myself on LinkedIn, and you'll find the links, or Absa CIB on LinkedIn, and you'll find the links there to download it.
Amazing stuff, and well done to all of you for this. I think this research is so important, and it really gives us some amazing insights. And as you say, some of the stuff is that has been happening out there. It just confirms a lot of things, but it also highlights areas where you can adapt and change and shift more towards and make more research available around this, and I guess the education side as well, which is important. So it'll be interesting to see how the research looks like next year at this time when it's conducted. So thank you very, very much to Zanele Thembisile Baloyi, Senior Researcher, Juanetta Furusa-Matelakengisa, who's Head of Digital Product Carbon Banking at Absa Corporate and Investment Banking. And thanks as well to Rob Downs, who's Head of Digital Assets at Absa Corporate and Investment Banking, CIB. Your story matters. Thank you for joining us, guys.
Exactly.
Thank you so much for having us. You have a good day.